Welcome to the Deep Dive. Today, we're digging into the 2025 U.S. car market. It's complicated.
It really is. You've got fluctuating prices, inventory doing strange things, those stubbornly high interest rates, and now these new tariffs causing ripples.
Right. And for this deep dive, we're pulling from folks like Cox Automotive, KBB, Edmunds.
The Manheim Used Vehicle Value Index, that's key for used cars, plus FRD data, and, of course, analysis on the tariff impact.
So our mission is pretty straightforward. Help you figure out if now is, a good time to actually buy a car, given everything that's going on.
Let's start with new cars then. What are the prices looking like?
Okay, so Q1 2025 numbers. Averages were hovering around $47,400, give or take.
So down a bit from the absolute peak. Late 2022 was nearly 50K, right?
Yeah, exactly. But, and this is the key thing, it's still like $9,000, maybe $11,000 higher than before the pandemic.
Mm-hmm. So that sticker shock feeling hasn't totally gone away, even if the year-over-year inflation looks milder on paper. Affordability is still a real challenge.
Definitely. What about the used market? People often look there when new prices are high.
Well, used prices in April 25 were listed around $25,100 on average. Interestingly, they actually ticked up slightly.
Oh, why is that?
Probably a mix of typical spring demand, but also maybe some jitters about those tariffs pushing people towards used options.
Makes sense. Still way down from the crazy peaks of 2021, though.
Oh, yeah, down from almost $30K back then. But think about it, $25K is roughly what an average new car cost back in, 2010.
Wow. That puts it in perspective. Is the wholesale market seeing the same thing?
The Manheim Index, the wholesale side, it's been relatively stable, so used cars are generally holding onto their value pretty well right now.
Okay, let's talk inventory. Availability. Early this year, new car lots looked better.
They did, yeah. We saw maybe 89, even up to 96-day supply early in Q1 25. Almost felt like buyers might have a bit more leverage.
But then the tariff news hit.
Exactly. Late March saw this sales surge, people trying to buy before potential price hikes. That pulled supply down fast to around 70 days by early April.
And used inventory. Still tight.
Yeah, stay tight. Running about 39 to 48 days in Q1, especially tough if you're looking for something under, say, $15,000 or $20,000.
Why is that side still so constrained?
It really goes back a few years. Think 2020 to 2022. Fewer new cars were sold or leased because of all the production disruptions.
So fewer new sales then means fewer trade-ins hitting the used market now.
Precisely. It shows how linked these markets are. A disruption in new cars echoes in the used market later on.
Okay, now for the painful part.
Yeah.
Interest rates.
Yeah, still high. Q1 averages were about 7.1% for new cars.
And used.
Even higher. Anywhere from 11.3% to maybe 14%.
Yeah.
FRD data for February showed 48-month new loans averaging 7.71%.
That adds thousands in interest.
Oh, easily. Cox estimated the average interest paid over a new loan started at Q1 25 would be over $9,200.
Woof. And that's pushing people into longer loans.
Definitely. We're seeing record numbers of 84-month loans, almost 20% of new loans in Q1. The average term is nearly 70 months.
Just to get that monthly payment down.
Right. But you pay way more interest over time, and those 0% deals almost vanished. Less than 1% of loans.
And the consequence is more trouble making payments.
We are seeing rising delinquencies, yeah, and more repossessions, unfortunately.
Then layer on top of all that, the tariffs. 25% on imported vehicles and parts?
Yeah, that late March sales rush was clearly people reacting, trying to get ahead of expected price increases.
And it's not just imports, right? Even U.S.-built cars could get pricier.
Potentially, yes, because many rely on imported parts. Estimates vary, but we could see average prices jump $2,000, maybe $6,000 or more. Luxury imports could see huge jumps, maybe 20K plus.
And that likely pushes used prices up too, more demand there.
Very likely. Plus, think about repairs, insurance. Those costs could rise too if parts get more expensive. Unsurprisingly, overall auto sales forecasts for 2025 got trimmed back.
So overall economic picture, new car prices are, 22% higher than 2019?
Roughly, yeah. And these tariffs are just adding more inflationary pressure. The Fed's holding rates for now, but future cuts seem less certain with this tariff situation.
So analysts are basically saying affordability isn't getting better anytime soon.
That seems to be the consensus. And that split we see in loan terms, lots of really long loans, but also growth in short ones, suggests the market's kind of splitting. Some stretch payments, others pay faster, maybe with bigger down payments.
Which brings us to the big question for someone listening. Should they buy now or just wait it out?
Well, arguments for buying now. You might avoid the full tariff impact, especially on current inventory. Maybe find some incentives on pre-tariff stock, lock in your trade-in value, lock in an interest rate if you genuinely need a car now.
And waiting.
Waiting could mean interest rates might eventually come down. We'll get more clarity on how these tariffs actually shake out. Inventory might improve later. Prices could soften if demand cools significantly. And obviously, you save money by delaying.
So what's the expert take? If you have to buy.
If a purchase is necessary, especially an import, sooner might be better than later to avoid potential tariff hikes. But, and this is crucial, don't panic buy.
Right. Do your homework.
Absolutely. Research, negotiate. Only pull the trigger if you're really comfortable with the price and the financing terms you can get today.
Ultimately, it boils down to your personal situation, doesn't
Yeah,
it?
it really does. Your needs, your budget, your risk tolerance.
So wrapping up, the 2025 car market is tricky. High prices, these tariffs creating uncertainty, high borrowing costs. It's a balancing act.
A real tension between immediate needs and an unpredictable future market, yeah. The buy or wait decision is deeply personal this year.
Okay, a final thought to leave folks with.
Just this. Think beyond the immediate purchase. Consider the long-term implications in this rapidly shifting landscape. How will today's decision fit into a potentially very different auto market down the road?